everybody. Good Sunday evening to everyone. Hope the weekend has gone well for you. Luke Gromen with FFTT, founder and president of Forest for the Trees. Thanks again for joining me on two things that grabbed my attention recently. We're going to jump right in. First off, Seth Klarman of Baupost, legendary investor, doesn't give a lot of interviews, was quoted in a New York Times article this week in which he said the seeds of the next major financial crisis, or the one after that, may well be found in today's sovereign debt levels. Klarman is especially worried about the debt load in the United States, with what it could mean to the U.S. dollar's status as the world's reserve currency. To us, this was another very big signpost. It makes Klarman, Dalio, Zell, Gundlach, all in the last, call it, 4 months, talking about a phenomenon that we have referred to tongue-in-cheek in our work as Voldemort. For those of you that are Harry Potter fans or familiar with the story, Voldemort, of course, is the villain whose name shall not be named for much of that series. And Voldemort, in this case, is the U.S. fiscal problems leading to a change in the dollar's reserve status. And consensus, the overwhelming consensus on Wall Street, is that this won't matter. None of this will matter, U.S. fiscal problems, that is, for 5 or 10 years. But you have a growing number of legends in the business suggesting that it will matter far sooner than that. And importantly, I think the reason they are thinking it will matter far sooner than that is because the math suggests it will matter far sooner than that. So that's the first thing. Second thing that grabbed our attention was the 180 the Davos crowd has done on China, which is 2 years ago, Xi received a standing ovation apparently in Davos. This year, he is now the, quote, most dangerous enemy, according to George Soros. And to us, it's fascinating because the bottom line is global bond and equity markets and U.S. bond and equity markets are not positioned at all for a world that begins to deglobalize. And I'm not sure there's a whole lot of work being done around the potential financial implications of that. All I would say is to us is that it's reminding us of the 1905 to 1914 time frame between the UK and Germany, when Germany was the up-and-coming centrally planned power, challenging British hegemony in the sea, around the world, and certainly on the oceans. And of course, those things came to a head. So let's hope things won't develop that way. But to me, just the complacency in markets around the geopolitical angle, which has accelerated meaningfully, is unfortunately it's disturbing. But it's, like I said, the complacency of risk assets market, not just in the U.S. but globally, very much of interest. So with that, I'm going to open it up for questions. As always, if you're interested in finding out what we're up to, check us out at FFTT-LLC.com. As some of you may have heard, we will be recording this week a sit-down chat on Real Vision with Brent Johnson of Santiago Capital, moderated by Grant Williams. So look for that coming out on Real Vision soon. Looking forward to doing that. And other than that, let me see what kind of questions we have here tonight, and we're going to open up the floor. I know there's a bit of a lag sometimes, so checking in to see if you haven't had it. Oh, there's one. China bad, all to do with the oil trade. Hi DD. Yeah, I don't think it's all to do with the oil trade. I think it is, the oil trade is part of if you look at what the deal was, and it was you buy our treasuries, and basically the United States offshored a lot of industrial capacity to China. China then sold goods back to the U.S. in dollars and recycled those dollars back into U.S. financial assets. Once China stopped recycling them in 2013, that was the first part of really the trade war. And then when China looked to start, they're basically arbitraging everything China's doing, and not everything, but much of what China's doing is a completely rational reaction to a totally irrational system. And by that I mean the United States prints IOUs out of thin air and gives them to China for real goods, gives them to the Saudis for real goods, finite real goods, the finite labor of people while they're here on this earth. And we just create IOUs out of it. And China has gotten to a position where they believe they're powerful enough to arbitrage this. And so they are, instead of storing their wealth in treasuries and financial paper instruments, they're going around and actually buying up finite real assets all around the world with those dollars, because the gap between claims on those real assets, or dollars in a dollar-centric system, are becoming so detached from the underlying value. It's a totally rational thing to do. Build ghost cities. I'd rather have a ghost city than a pile of treasury bonds. And so I think, to answer your question, the oil contract is part of that strategy, and I think that is ultimately why China has gone from being in the United States' good graces to not, because nothing they're doing that we're accusing them of doing, nothing they are doing, is any different than what's been going on for 15 to 20 years. If you would ask anybody in the Midwest that lost their factory job to China 15 years ago, none of this is a surprise to anybody, from executives on down to factory floor workers. It's just all of a sudden they care about it now. They care about it now because of what China began doing a couple years ago. Let me see here if I can scoot back up to the top here. Thank you very much for the kind words on the book. Let's see. Hello from San Fran. Hi, Andrew. Any significance on PLA having their giant ground army? Ground army pointless versus U.S. after all. I did not see anything about them having their ground army, so I would have to defer. I would say hypersonics and satellite warfare are the key going forward, even away from ground army. Aircraft carriers, if the aircraft carriers can't see where they're going, they aren't of much use. They're much more like battleships pre-World War II. Let me see. Who is Dmitry Shalvatsiotis? He's a good friend of mine. I mentioned him at the beginning of the book. And thank you for the kind words regarding the book. Let me see. Do I think Trump knows about restructuring the dollar system? I think that certain elements of the U.S. administration understand that a much weaker dollar and/or change in the status or structure of the dollar's reserve status would go a long way in accomplishing a lot of what they have said they have wanted to do. It is a question of path. It is a question of bargaining leverage. It is a question of political cover. But I do think there are elements in the U.S. administration that understand that quite well. Let me see here if I can scoot back up to some of these other. There we go. Bear with me here. Had it. Almost had it. Trying to go back. There we go. Okay. If the dollar loses its reserve status, what replaces it? Hi, Sam. Nothing's going to replace it, in my opinion. What you're going to have is a change in the status or the structure of the reserve system, in my opinion, which is to say that you will have the dollar, you'll have the yuan, you'll have the euro, you'll have the pound, the yen. They will all float against some neutral reserve asset. When I say neutral reserve asset, it will be not issued by any one sovereign. And the way or the reason it floats, the ratio in which it floats will be based on current account balances, energy imports, energy exports. There's a number of different ways you can weight it, but ultimately, I don't think anything's going to replace the dollar. SDR, gold in the SDR, something like that, will take the place of treasury bonds. We'll all still be using dollars and euros and yen for a long, long time, in my opinion. And importantly, my opinion on the development in that direction is based on a number of different things that multilateral organizations and different sovereigns have said over the last 10 years. Let me see. How would a weaker dollar be positive for the U.S. and risk assets overall? Hi, Mark. Ultimately, the dollar short that everybody talks about, everybody's borrowing in dollars. You would, if the dollar, if you have a short position on and the value of what you are short falls, you make a profit. You are better off than you were. If everybody's short dollars, and that is everybody from China to the U.S. government, to U.S. Social Security, U.S. corporations, to Europeans, everybody's short dollars. If the dollar goes down a bunch, everybody who's short dollars wins. Who's long dollars? U.S. banks, U.S. Pensioners, U.S. Mutual funds, or U.S. retail investors through their mutual fund holdings. So let's see here. January deficit guesses. Hi, Michael. I don't have a guess. My guess is it's going to continue to be a big number, and I think later this year people are going to be surprised by how big it gets. Anything about Venezuela? Hi, Abdul. You know, it's been a little disheartening to me watching what's been transpiring both in Venezuela over the last 5 years, and then most recently the United States' sudden interest in what's going on in Venezuela. And to me, maybe that's the best way to phrase it. The thing that, as it relates to the economics of things, from the macro picture, the thing that's grabbed my attention most is nothing that we're accusing Venezuela of is new. It's been on for 5+ years, and yet now all of a sudden we're ramping it up. And to me, that is curious, and I don't fully know what I mean to say beyond that it's curious. But you know, why now is the thing that has my attention the most. Let me see. Will the U.S. have the option to follow in Japan's footsteps given the twin deficits? Great question, Dean. No. In my opinion, and based on our analysis, if the MMT crowd is citing Japan as, see, you can print all the money you want, you won't have very high or destructive inflation. Japan is a creditor nation. Japan has its military provided for it by the United States, in large part, its defense provided for it. Japan is a very geostrategic, important place for the United States in a very important part of the world, and so there are there are big differences there. You know, U.S. runs twin deficits, has to provide its own defense, of course, and so and critically, the yen's not the global reserve currency, and the dollar is, and so that those combination of things make me believe that, you know, the MMT crowd, while I think they are they're moving in the right direction when you talk about devaluing the currency as a needed step to get us back to a true sustainable recovery. I'm not sure that the Japan example holds. Let's see. Hi, Sundar. Thank you very much for the kind words. What do I think about the current $450 billion of infrastructure spending? I'm assuming you mean the Saudi announcement. I think it's still early on. I've not seen. I'm not sure what other one you're talking about there. Let me see. Venezuela. Hi, Doug. Talked about that a bit. To me, it's curious. Look, public enemies 1, 2, and 3 for the United States are Venezuela, Iran, Russia, all nations looking to price oil in yuan, and of course we've had China, who issues yuan, suddenly go from being somebody we have a very friendly relationship, whether favorable trade relationship with, to one that is very tumultuous. So I tend to think that it has a lot to do with the currency, with multi-currency energy and commodity pricing, and what that implies for the dollar and for the U.S.'s ability to run deficits without tears. How about gold on Friday? Wall Street Journal article about balance sheet reduction. Hi, Jonathan. That's what I thought it was. I saw a couple other articles talking about some things going on elsewhere. To me, I thought it was heavily on the Nick Timiraos article in the Wall Street Journal, where they're floating what I thought was a trial balloon from the Fed. He's whispered to be one of the Fed's guys at the Journal that kind of floats out trial balloons, if you will, is sort of how at least a number of veteran traders on Wall Street think about articles like that, and is what I've been told. And so I thought that's what gold reacted to at that point. Is there any option that Venezuela replaces Saudi and Iran's oil? That's a good question, Abdul. Look, the Saudi finance minister said last week they're looking at borrowing in euros and yuan, which I thought was another very big hint that multilateral energy pricing continues to develop. I think strategically, conceptually, yes, that something like that could work. Where Venezuela has very large oil reserves. It's a different grade, but does that grade mix well with U.S. light oil? I would think theoretically it might. I think clearly there is a geopolitical energy angle through tied to the currency going on there. Is what I think is most likely why we care now as opposed to 3 years ago, 5 years ago, etc. So I'll pause there. Let me see. I talked on the PLA question already. Talked about that. Let me see. Davos becoming obsolete. Hi, Andrew. I don't know that it is. I don't think it's obsolete because you are getting a meeting of the minds there. I think what's obsolete is the marketing of it. And so I don't think it's a bad thing ever when you get a bunch of people from a bunch of different places who may all have different views of the world together. And these are people that can make things happen. They're powerful people, they're wealthy people, they're connected people. I never think it's a bad idea to get all of those types of people in a room to talk. What I think is obsolete is the message coming from the messaging coming from Davos. It is with each passing year post 08 gotten more and more tone deaf, and I think they would do themselves a lot of favors by being a lot more honest and giving sort of the other 99.999% of the planet a little bit more credit in terms of understanding what's going on in the world and being honest with people. I think that would be a great big step going to take a step forward in terms of their credibility. Let me see. If the world is looked at as one giant business, what would the balance sheet look like? Hi, Brad. Great question. Look, you've got sort of the sustainable stuff, which you can work out, and sometimes it gets out of balance in terms of creditors and debtors, right? So the U.S. runs a big debt deficits. The way the currency system's worked for 40 years is we've had to do that. Some of the creditors no longer like that system. Where it gets a little scary is the off-balance sheet liabilities in two places. Number one, Western social democracies, so they call it the 200 trillion or 100 trillion that we owe off-balance sheet, and similar numbers elsewhere. Generally speaking, those look like debt. They are like debt, but they have not had any reserves held against them. That money needs to either be defaulted on or printed. And then the other side of it is the derivatives, which also are held off balance sheet because they are mostly netted out as long as nobody in the financial system of any size goes bankrupt ever again. And so if you look, if derivatives have to come out back on balance sheet for any reason, and if as entitlements globally have to come back on balance sheet, the balance sheet's a mess, and that's why you need to devalue the currencies in broadly speaking. But again, the dollar's the reserve currency, so it's the one that's really got to get marked down. Widening deficit hasten chance of devaluation. Hi, Tony. In my opinion, yes, only because for as long as foreign central banks in particular and foreigners more broadly are not financing our deficits anymore, they're not sterilizing, they're not buying incremental treasuries as our deficit grows, that's going to crowd out the private sector. It has been crowding out the private sector for going on 5 years. It's getting worse, and at some point that then hastens the need for a devaluation. And let's see here. Trying to fit a couple more questions, then I'm going to jump. It looks like it's about it. All right, guys. Well, hey, thank you very much for joining me again on Sunday night, and I hope everyone has a great week, and I look forward to catching up with you guys all next Sunday night. Otherwise, have a great week. Take care, everybody.